days session worth of trade. I've been waiting 3 days now essentially for the markets to throw me a bone in terms of an update when it comes to the market analysis. It's been a very sleepy week so far. You can see here on the S&P 500 that really since Friday last week we've done absolutely nothing. We've seen 3 consecutive series of candlesticks whereby we're just marking time. We're moving sideways. We're waiting for those exponential moving averages to catch on up to price before we see the continuation of the trend to the upside. It was looking as though on Tuesday that we were establishing, the series, or at least the formation of a bull flag continuation. It sort of broke down today during Wednesday's session. We didn't see a clean breakout to the upside, but as it stands again, with about 5 minutes left during today's session, we have seen a little bit of a pop, a very brief, albeit short-lived pop. We're up roughly 8 points at the moment, or 7.5 points on the S&P 500. But really in the context of things, look, we still haven't closed this gap here. This is taking us back to to Thursday last week. That was Thursday the 5th. And also prior to that, we still haven't actually come on back down and closed the gap, which has really led to that really weak beginning, right, for the month of December that we currently find ourselves in. So there is still a chance, possibly, that we see these markets either pulling back down to this first red line or even respectfully down to this second red line. However, again, in the context of what the market is doing, being very close to its all-time high, it does look as though that if this is not that of a bull flag continuation, it makes sense that this is some form of a stair-step continuation pattern as well. No matter how you slice it, to some degree, it looks as though we are just digesting, of course, the month that we saw prior, right, throughout that of November, and also really for that sort of second half of October, this period through to this period here, whereby we just saw the markets just cleanly trend. This is essentially phase one, you could say, of the breakout trend. What we're doing at the moment, if you wanted to look out and see this in a little bit of a deeper perspective or broader perspective, is that we're really just going sideways. And as such, what we spoke about over the weekend is that we're just allowing, of course, the ADX to reset, not only on the S&P 500, but also on the Dow and the NASDAQ, but also to see if the CCI, the Commodity Channel Index, can hold up above positive 100. At the moment, both of these things are occurring at least on the S&P 500, but more importantly, you can see that we're still lingering around that rising 10 exponential moving average. Recently, during Wednesday's session and also on Tuesday's session, you can see that we've had those 2 retests of the rising 10 exponential moving average. We have seen a very brief, very short-term reaction off from it, but at the same time, we still haven't broken out above the swing high, which takes us back to the 27th of November. So again, we're sort of stuck in no man's land. We're in the middle of absolutely nowhere. We are going absolutely nowhere, and as such, you're simply just having to persist with the patience that hopefully you've had really Monday through to the close of trade, which is essentially occurring right now as I continue with this afternoon market recap. So essentially that's the S&P 500. On the Dow Jones Industrial Average, it has been probably even more sleepier than that of the S&P 500. If I go to the weekly chart, you can see here we're down 121 points. But in the context of things, again, we're just trying to feel that first open window of the 2 windows. Again, going back to this candlestick here, which was at the 5th of December, we still haven't successfully done this, and as such, we're still sort of combating around that of both the 10 and the 20 exponential moving averages. Not sort of the mantra or the centerpiece of the 3 markets that we look at. We generally like to focus more so on the S&P and also the NASDAQ. But if I quickly go back to the S&P 500 and just show you this on the weekly chart as well, this is something that I just very quickly failed to mention to you. You can see that we're down really 5.86 points, very close to 6 points. We've got a doji candlestick here, but as such, it's just the continuation of essentially a 3-week consolidation to, or at least sideways, which is really just allowing, of course, again, those exponential moving averages to catch back on up to price. If I zoom on in and show you this on the Dow Jones, you can see that we're flirting with the open gap. We still haven't closed it definitively, but now we're starting to interact once again with the 10 and also the 20 exponential moving average. If I can bring up the right template, not only are the oscillators resetting on the Dow Jones, I'll flick on over to the S&P 500. You can see that they have temporarily pushed out of overbought settings, which is okay. More importantly, though, what you want to be focusing on is the ADX and also the CCI. You can see that ADX is back down at the resting line here at 20. CCI, surprise, surprise, it's lingering, holding up just above 100. So technically, the trend is still in effect. However, what we are doing, once again, is just pulling over to the side of the road. We're filling up the gas tank, right, so that we can continue on our merry way down the highway. That direction, of course, is to the upside when the markets begin to break above that late November high. Now, the final market I'll recap for you again in the first 3 sessions of this week. Boy, am I hoping that Thursday brings a little bit of fireworks, something more so to sort of digest for you and to recap. But again, you can see if I just start on the weekly chart, we're down 7 points, so to say, on the NASDAQ. We've done absolutely nothing. We have another doji candlestick so far on the weekly time frame. We still have another 2 sessions obviously left in the week ahead. But as such, it sort of fits that general pattern of a bull flag continuation pattern. If I bring up the exponential moving averages and zoom on in for you, you can see once again that we are interacting with that rising 10 exponential moving average on Tuesday and also on Wednesday. We still haven't definitively closed the open window, nor have we come back down to this candlestick over here, which has really established that first, right, series of gaps that we've had now in the month of December. This is going back to the 3rd of December, which was the Tuesday. So again, bit of mixed signals here. We certainly don't have any macro reversal signals in the markets. Again, this is just part and parcel of a trend and a trend continuation. You go through these marking time or digestive sort of periods of time before we see the trend continuation to the upside. So again, whether you want to break this down as a stair step or whether you want to break this down as a bull flag, everything seems to be a-okay as we are still holding up above those exponentials. We're still resetting out of overbought territory on the oscillators. You can see here that the ADX, this is probably my favorite indication at the moment, whereby you can see the ADX down at 20 or 21.57. You also have the CCI sitting above 100. So again, this is telling you a lot about the trend continuation and the odds of that. So when we sort of bring this full circle, and as I sort of say farewell to you on this Wednesday afternoon, what part of me should you be thinking about? Well, at this particular time, to me, it still makes sense that the markets are still going to upwardly drift to their targets that we've spoken about. These are the projected measured moves, either off from the ascending triangle on the S&P 500 or the symmetrical triangle on the NASDAQ. So I'll just repeat that, 3,175. This is going to be the thermostat, so to speak, on a bunch of individual trades that I will recap if we start continuing in that direction. And also on the NASDAQ, 8,900 points. The good thing about these targets, and really what makes sense to me again, as I've gone through a million trends over the past number of years, is that if you've got a projected target, being that of a measured move, and you've also gone through the process of resetting the ADX after a trend breakout, the likelihood is that you're going to continue in the direction of the trend off from one of the exponential moving averages. And it makes perfect sense. It's sort of crystallizing very well, right? There'll be a lot of people out there who are confused as to why the market's not going up and also confused as to why the market's not going down. But really, this is a process, a linking, right, a feedback loop essentially between the ADX, the CCI, the trend continuation, and moving towards a target. And you could say that we're over sort of 3/4 of the way towards that target. We'll see whether or not Wednesday really brings any legs into Thursday's session. But again, that's really what you should be thinking about at this particular time. Don't be frustrated, okay, if the market's not moving as quickly as what you would like to see them, right? We obviously have no control over it. But as such, just find a lot of certainty in the trend continuation and also in the trend direction. If you can do that, if you cannot overthink it, and if you cannot overtrade it, i.e. exiting and sort of entering into a bunch of new positions during that of a trend, and if you can just sort of ride out the entirety of the trend or the majority of the trend itself, that's really the best way to trade in this type of market. Understanding that the market dynamic, it has shifted. It has shifted from a period of consolidation, all right, depending on what macro time frame or intermediate time frame that you're looking at, whereby the market itself and also the sentiment and psychology was sell at resistance and buy at support up until the point where we really began to trend, right? Or at least when we established that consecutive low, higher consecutive low in the period of August, whereby we saw that definitive rally, the next pullback, which established again that next consecutive high low, and then of course the trend breakout that we've seen during the month of October, which has continued through to November, and obviously this little hiccup that we've had in the month of December. So the dynamic has shifted from selling at resistance to now buying, right, at any pullback. And that is a major psychological shift that has taken place. It took place really 1.5 months, bordering on 2 months ago. And that dynamic, it's going to take a lot to actually change that. All right, the Fed, obviously, it's keeping rates out, on pause, probably throughout the entirety of 2020 as well. So there is going to be certainty around monetary policy moving forward, or at least to some degree of certainty around monetary policy moving forward. Obviously, it's data dependent, but as it stands, that forecast at least is now projected out very deep into 2020, if not 2021. And it aligns perfectly, again, with some of the fundamental indicators that we follow month to month, right? All of this is crystallizing very well. It's coming together, very nicely. You're really starting to see some patterns emerge, not only in the technical analysis, but also in the fundamental analysis away from what the Fed is talking about as well, which is very powerful in and of itself. It brings you a lot of confidence, and also it brings you a lot of certainty in trading in the aforementioned trend direction. All right, so as at the closure now on Wednesday, I'm going to say farewell to you. Remain patient, remain disciplined, and again, just to recap, push those positions, if you're trading market positions, deep deep into 2020 and just allow it to sizzle away. Forget about it, and then just allow this market to continue on its merry ways when it chooses to do so once it breaks above this candlestick here, which is dated the 27th of November. All right, then we'll be moving towards our projected measured move targets. On that note, everyone, it's James saying farewell to you on this Wednesday afternoon market recap. I hope we start to see some fireworks sooner rather than later. But again, the markets themselves, they have been relatively sleepy Monday through Wednesday. All the best, everyone. James signing off on behalf of Pivot Point Trading. Farewell.